Welcome back, my friends. NVIDIA on cusp of overtaking Apple as second most valuable company. Why Apple's recent decline may be just the beginning. According to the charts, Apple stock extends, declines for sixth day. The latest blow came Tuesday, when Counterpoint Research released a report estimating that Apple sold 24% fewer iPhones in China, the world's second biggest economy, in the first 6 weeks of 2024 than in 2023. Overall smartphone sales declined 7% in the period, the report said. So, has Apple peaked and now tipped into decline? Or is this just a temporary pullback in preparation for the next leg up? But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. NVIDIA is nipping at the heels of Apple to become the world's second most valuable company, as investors cannot get enough of the semiconductor maker whose chips power popular artificial intelligence tools such as ChatGPT. An AI-induced jaw-dropping rally in NVIDIA shares has taken the company's valuation from $1 trillion to more than $2 trillion in just 9 months, overtaking Amazon.com, Google parent Alphabet and Saudi Aramco on the way. NVIDIA's market capitalization currently hovers around $238 trillion, lagging Apple by just about $230 billion and Microsoft by about $645 billion. The relentless rise in shares of NVIDIA, which controls 80% of the high-end AI chip market, has been instrumental in pushing Wall Street to record levels this year, while giving the company a more than 5% weightage on the benchmark S&P 500 index. NVIDIA, which is up 95%, and Meta Platforms, which is up 46.6% so far this year, have also outperformed shares of other members of the so-called Magnificent Seven, highlighting investors' insatiable appetite for everything AI. NVIDIA's rally reflects the incredibly strong fundamentals underlying its current business model, said Richard Meckler, partner at Cherry Lane Investments, a family investment office in New Vernon, New Jersey. It is also finding strong speculative support as a favorite among long option buyers who have seen almost a straight upward climb throughout 2024. Meanwhile, Apple, which is grappling with slowing iPhone sales, ceded its position as the most valuable U.S. company to Microsoft for the first time since 2021 in January. In recent weeks, NVIDIA also replaced Tesla as Wall Street's most traded stock by value. The stock's 12-month forward price-to-earnings ratio of 36.6 is lower than where it was a year ago, despite the stock's strong run as analysts raised its profit estimates. By comparison, Intel's PE multiple is 30.24 and that of Philadelphia SE Semiconductor Index is 39.6, LSEG data showed. NVIDIA is in fact the cheapest of the AI narrative stocks out there, said David Wagner, portfolio manager at Aptus Capital Advisors. We continue to believe that in 5 years or 10 years we will all be talking about an industry that is far larger than the numbers being bandied about today. However, there are signs NVIDIA stock is nearing a peak. Over the next 12 months, Wall Street analysts' median target price implies NVIDIA would trade at $850 per share, below the last closing price of $926, LSEG data showed. Of course, it is very difficult for any mega-cap stock's price to continue to grow at this pace as the law of large numbers eventually comes into play. But the stock price could remain at these levels if the company can continue to meet or exceed the high expectations of analysts, Cherry Lane's Meckler said. Apple's recent decline may be just the beginning. According to the charts, Apple's stock has faced several challenges recently, leading to its decline. Here are some key reasons. Investors are concerned that Apple won't escape the effects of supply chain shortages. These shortages have impacted various industries, including technology, and may be affecting Apple's production and distribution. There are worries about a potentially slowing economy, which could impact consumer spending. As a major player in the tech industry, Apple is not immune to broader economic trends. The overall market decline has also affected Apple's stock price. Investors have turned away from tech stocks due to concerns about increasing inflation and its impact on consumer behavior. Apple's recent earnings report showed that while profits and revenue beat expectations, overall sales declined by 1%. iPhone, iPad, and Mac sales were not as robust as anticipated. The company's outlook for the next quarter indicated similar sales, with iPhone sales expected to perform better than a 2% year-over-year decline. The recent rise in COVID-19 cases has forced Apple to close some retail stores due to a spike in new cases. This situation has contributed to investor uncertainty and may be affecting the stock price. Remember that stock prices can be influenced by a multitude of factors, and it's essential to consider both short-term fluctuations and long-term trends when evaluating investment decisions. Warren Buffett, the legendary investor and CEO of Berkshire Hathaway, made headlines when he sold nearly $2 billion worth of Apple shares at the end of last year. Given that Apple has been a cornerstone of Berkshire's portfolio, this move raised eyebrows. However, there are clear reasons behind Buffett's decision: tax considerations. While Buffett is known for his long-term investment approach, he also pays attention to tax implications. By trimming some positions and exiting others, he manages the tax consequences of his sales. Berkshire Hathaway reports deferred income taxes on unrealized gains, but these taxes are only paid when shares are sold and gains are realized. Diversification. Buffett sold several stocks in 2023, not just Apple. He reduced positions in various companies, including HP and Paramount. Global diversification is essential for risk management, and trimming positions allows Berkshire to allocate capital more efficiently. Market dynamics. The stock market can be unpredictable. Buffett's decision to sell Apple shares might reflect his assessment of market conditions, including potential risks and opportunities. It's essential to consider the big picture rather than focusing solely on one stock. Past mistakes. Interestingly, during Berkshire's 2021 annual meeting, Buffett admitted that selling Apple shares in the past was probably a mistake. This acknowledgement highlights the complexity of investment decisions and the need to learn from both successes and missteps. While Buffett's move surprised some, it aligns with his overall investment strategy, tax management, and the ever-evolving dynamics of the stock market. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.